Welcome back to the Investor Professor Podcast. This is Dr. Ryan Peckham, and this is episode 70. On today's episode, we're going to look at some of the companies that have reported earnings this week, maybe take a little bit of a preview of the companies that are upcoming, and we're also going to look at big institutional investors and what they invest in. So I'm going to teach you how to look up where big money is investing their money, and maybe we can add some context to that. So hope you'll join us. Get your mind right, and let's get to work. Well, welcome back, and thank you again for joining us. The stock market in rarity. The stock market was actually up this past week. I have almost forgotten what that feels like. So just tremendous. So companies have started reporting earnings. The earnings are not as bad as was feared. And more so than that, the commentary on what they think the future is going to look like has not been as bad as feared either. So that definitely helps. You had a Fed president come out saying that she'd like to see some of the rate hikes be slower. And so that really ignited the market on Friday. And it just kind of shows you how much money is on the sidelines just waiting for the Fed hikes to be slowed or whatnot. And really, everybody's just trying to find that bottom, right? So you look and you see some of the company earnings that have come out. You know, United Healthcare, good earnings. PepsiCo, good earnings. Snapchat, disastrous earnings. Not that Snap is a company that we really follow. I think it's kind of interesting. Most of the digital advertisement dollars are spent either through Facebook, Meta, or Google. And so sometimes you'll see those two names sell off if Snapchat has bad earnings, but it really hasn't been a very good precursor to what those earnings are. So even Netflix had good earnings, and they added subscribers, which they're I think going to stop tracking or start reporting what all their new subscribers. They really want analysts to start looking at their earnings and revenue growth. And so you have to kind of commend them on that, kind of changing the way that the company is going to be viewed as they kind of hit maturity here in a lot of sectors. But that new, they're going to come out with a new ad-based tier at $6.99, pretty aggressive pricing on that. They say there's a huge backlog of advertisers that actually want to advertise on the Netflix platform. So we'll see in future quarters how that looks. But really, when you look at these earnings, just something, if you're going in there and you're looking at companies, you want to look and see if they're really beating their earnings or what they're doing. So there's a couple ways that a company can, improve the earnings, right? The number one you want to see, like a real earnings beat, is that you want to see them grow their revenue, right? Or their sales. You want that sales number or revenue number to be going up, meaning there's more demand for their products. But sometimes, they can basically just be cutting expenses to beat their earnings. So maybe sales are going down, and so the company starts aggressively, cutting their expenses, and so their earnings still look like they're rising, but actually it's just because they've been cutting expenses. And so, you can only do that for so long. So really just trying to figure out how these companies are really doing. Are they going to do well for the long term? That's really, really kind of what you want to see. So this next week, we have a lot of the big, important companies reporting their earnings. So the Amazons, the Apple, Google, Microsoft, these are going to be the ones that really kind of anchor the market or cause frustration for the market. So hearing what they have to say is going to be paramount, because they do, a lot of the indexes are built up of those companies so much because they're so large, they're so valuable. And so that's really going to kind of be the market's going to take their cue from them. So, but it is nice, this past week. I mean, inflation obviously is still around, but it's not the main story every day, every minute of the day. And it's not political stuff really too much yet. So the companies, when they're actually reporting their earnings, we kind of get a little break from that, because after these companies have reported, it's all going to be about the midterm elections, and we'll be on that roller coaster. And so we'll see. So, but it's nice here looking at the positions. Some of the positions I'm invested in, I've been pretty nicely surprised by their earnings. And really, I'm thinking more long term, and hopefully you are too. I'm not going to get too mixed up on, one earnings call. For example, Tesla reported earnings, and, it was okay. It was kind of mixed. But a lot of their sales, I think, some of their earnings will be pulled into next quarter because of their deliveries. And so I try not to get too caught up in one earnings cycle. I think you look at a company like Tesla and you look at the infrastructure they've built, you look at the new gigafactories they have, and when they get those all going, what the production level is going to be for them. I think it's going to be pretty tremendous. And even Elon Musk saying that, even if there's a recession coming, he said that, Tesla still pedal to the metal. So, you like to hear that even though, things might be slowing down, they're not slowing that down that much for them. The Twitter deal is supposed to close this week, unless there's some kind of government intervention. And so we'll see what happens there. I'm hoping that deal closes and we kind of move away from this, Elon Musk Twitter every single day. I think that's actually kept the price of the Tesla stock has been beat up because of that. And so we'll see if it can't maybe outperform once this is done, because it has actually underperformed since all of this stuff kind of hit. So we will have to watch that. But it'll be interesting, watch these companies, see how they report, even if you're not invested in some of these companies, right? If you've been listening to this for a while, one of the recommendations is to kind of come up with your list of companies that you want to invest in. And so if you have your list of companies you want to invest in, you can go and look up, when they report earnings. The website I like to look at is called earningswhispers.com, and you can kind of get the day they're going to report and all that kind of stuff. But it's nice to just start tracking the companies that you're looking to invest in, kind of start familiarizing yourself with how they report earnings, what things normally look good for them, and just kind of start building that track record of what's going on. A lot of times, some of the best investments I have made has been after a company has reported earnings and maybe they missed earnings by a little bit and the stock gets really beat up and it just seems a little bit overdone. And I'll go in there and buy some shares of that stock, and then 2 weeks later, it's right back where it was and kind of the dust is settled. Sometimes a company might report earnings and somebody's unhappy with it, and then they see how all the other companies are reporting, maybe in their industry or, their sector. And then they realize that, this company actually outperformed versus their peers. And then that company will end up going up later on. And then also, the stock market is so data dependent where somebody will report earnings and then immediately the stock will react. The algorithms and all that take over, and then they'll have the conference call. The company will tell you what happened, and then all of a sudden the company or the stock recovers. So, don't let it drive the train, so to speak, on your actions, but it is important to at least pay attention to what's going on. So one of the things I thought would be a little bit interesting is one of the places that I like to get investment ideas from is looking at who big money managers, big institutions, who are they investing in, right? And I'm not talking about Vanguard or State Street or some of the big ETFs and mutual fund holders, because they really just own a whole lot of everything. But I'm talking about some of the big hedge fund managers that you see and hear about. They could be Bill Gates, Warren Buffett, Ray Dalio, Seth Klarman. The list kind of goes on and on. George Soros. I mean, all the kind of the people that you read about and see and kind of get the headlines. And so one of the things that they are required to do is called a 13F. So a 13F is basically last quarter. They do this every quarter, but it's really the last quarter's what investment activity did they have? So it's basically what stocks did they invest in, maybe which ones did they buy, which ones did they sell, and you can basically see their portfolios and see what they're investing in. And so this, for me, has always been a really good place to kind of go to find out what are these, I hear what they say on TV, but what are they actually doing? What are they actually, investing in? Where are they really putting their money? And so it's a great source to just kind of see what's going on. And so, I started looking at this. I kind of follow, the biggest thing about being an investment, just an investor in general, is you really have to know your personality. You have to know the kind of investments that you like, that you flock to. Are you going to be an investor and hold the companies for a number of years? Are you going to try to be more like a trader, or you're, kind of a hedge fund manager of your own portfolio? And so really, you kind of look at what your personality is, your investment style. I guess investment style would be a better way of putting that. What is your investment style? And then go and start looking at the managers and different people who manage money and kind of partner yourself up with those kind of investors. Right. So, I talk about Warren Buffett a lot. I like his investment strategy, him and Charlie Munger, and it's kind of my kind of personality. Like I like that. I like to think about doing the work on a company, realizing it's a good investment, thinking it's going to be a good investment for a number of years, not overthinking it, and just staying invested in that company. Right. And so, but you go and you look for the managers that are a little bit like you. And you can even kind of make a list of the ones that aren't like you just to kind of track what they're doing as well. I mean, I look at a number of these investors, but then you go through and you start looking at what they're holding. And so I like to look at it, see what they're adding money to, see what they're maybe subtracting money from. Ray Dalio, for example, for a number of years, he was really big on investing in China. And so, but he had a lot of investments in things like Alibaba, Baidu, just really kind of overweighted his portfolio towards China. And then when we started having all the kind of political issues with China, like it did not perform well for him. It did not. But when you look at it now and you look at inflation, and if we're going to have a couple years worth of inflation, he has completely repositioned his portfolio, and he owns things like, right now, number one holding is Procter & Gamble, Johnson & Johnson, Coca-Cola. You start going down this list: Pepsi, Costco, Walmart, McDonald's. What are some things that all these companies have in common? Well, all of these companies are things that people really kind of have to buy. Right? So you can't really go to a grocery store and not buy something that Procter & Gamble doesn't sell you. But the other big key to these is that they're able to pass along cost raises to customers, right? So they have pricing power, and with inflation, they can pass along that cost to consumers. And so you see how he has redone his portfolio based on that. And so, but I thought it was interesting too. Some of the most, I would say, conservative investors, Seth Klarman is kind of a Warren Buffett type guy. And I thought it was very interesting. One of the new stocks that he's added is Amazon. Actually, there's a lot of people that have either added to Amazon or they have been increasing their position in Amazon just because of the significant price drop in the stock this year, which I find interesting. Those are the kind of trends that I'm looking for, right? Like, okay, who's added what? Who's added to a position? Who's created a new position that doesn't seem like something they have really been invested in before? That becomes key. Now, the one thing I will tell you as well is that a lot of times you'll see a position that might be added to a portfolio, but you really have to do your own kind of due diligence for context to see how much of that how much is that investment, what percentage of their portfolio is that? So I want to see, are they really going strong after something, or is this something they're just kind of nibbling on, taking a fly on, right? So you look at Bill Gates' portfolio, and this is last quarter, but one of the companies that he added was Carvana, which Carvana, used car stock, it has been absolutely devastated. I mean, a lot of people think, or a lot of analysts think they might actually go bankrupt. So, July 1st of 2021, this stock was $337 a share, and now it's $14.35. So it's down like 96%. They have a lot of debt. They're not earning a profit. And so when you have a lot of debt and you're not earning any money and you're just servicing that debt, I mean, it's, this is not the environment for a company like that, especially with rising interest rates. They took on some more debt this year at an interest rate of 10%. So, things get ugly, or can get ugly. So you look at, what he owns on that, and he bought a lot of shares. I mean, 520,000 shares. But for Bill Gates, that's actually a very small piece of his portfolio. And so it's interesting to see that, but you have to look, okay, what's the context? How much of his money is he actually putting in that? And so when you start seeing somebody make a large investment, 10% of their portfolio, some people even do 20% of their portfolio. I mean, that's when you really have to start looking and say, okay, what's going on here? What are they looking at? And maybe what should I be looking at? So all these things kind of, when you combine them, you can find some pretty good information. So one of the places that I go to look this up, and you can do the same, is a website called Well Wisdom. So well as in the animal, WHALE, wellwisdom.com. And so they start looking at, what's going on here. So I think for this quarter that just ended, they have to be in by November 14th. So anybody who's, managing this money, managing money for people, they have to go in there and update their 13F filings. And so, but it's pretty interesting just to be able to see, and you can look it up for a ton of different companies that you probably wouldn't even realize that you can kind of find this information for. But there's just a wealth of knowledge out there that you can just access for free. I mean, it's just amazing how much information is actually out there for free these days. One thing I forgot to mention is that another very interesting piece of this is that a lot of times it'll tell you what the estimated average price they paid for the stock is based on the days they bought it. So I always find that to be very interesting as well. And then you can kind of just see their habits, who's holding on to what, who trades more often, does their top 10 stay the same? I mean, those kind of things are just very, very interesting to me. So, all right. So this week, big time earnings. We got Apple and Google. They're going to report Tuesday after the bell. Microsoft and Google Tuesday after the bell, and then Apple and Amazon Thursday after the close of the stock market. So we'll see how that goes. Hopefully they do well. The market will continue to rise. Gosh, could we have 2 weeks where the market actually goes up? I don't know if we've, I really don't know the last time that has happened. It has just been one of those years where, I've mentioned it before, but where you really just have to think about the number of shares that you're accumulating. So for my personal portfolio, I went through and looked at it. I looked at what my account balance was at the end of last December to today, and I'm up just a little bit, but I have saved a ton of money this year, as much as I possibly can, and I've actually increased the number of shares in my portfolio by about 2,500. So 2,500 additional shares of different stocks. It might be more than that now, but I'll go back and look, and maybe at the end of the year I'll kind of dive deeper into that. But I'm just thinking about share counts. What are some good companies that I can own? This past week, personally, I bought more shares of Amazon at $107 a share. I just look at that and go, my goodness, how can I not buy that? How can I not find $107 somewhere that I can invest in this? And I've said that for weeks and weeks. Of course, I'm not your financial advisor. You can kind of talk to yours and do what you think is appropriate for you. But I just look at some of these companies and looking at this going, man, if I just hold on to this for a while, I really I do believe that I'll be able to make a substantial return on this if I just have a long enough time horizon. And I shouldn't say long enough, but I mean, I'm thinking 3 years down the road that I'll be doing pretty well on that. So I look at the money that I'm spending today, $107 on Amazon, and I look at that being, who knows, 150, 180, even if it just got back to where it started the year, it'd be 180. And so, you have to be willing to look out, as we've talked about, every single week. So, but go look at some of the top people that you've watched on TV or read, and go try to find out what they own and see what they're really doing with their portfolios and the money that they manage. And I think it'll actually make you feel a little bit better about some of the companies that you look to invest in. It's nice when you kind of have your list and you go look and see what, big, kind of the smartest financiers in the world, what they own. And you sit there and you go, man, I can own exactly what they own. That's a pretty nice place to be. So this is kind of not something that I would just go off of, right? I would never own something just because somebody else owns it, but it's kind of just another thing that you can add to your playbook, if you will. Just another thing that you can look at, just another layer of research to kind of base your research and your analysis on. It's just something else that you can add to it. So I appreciate you. I hope you have a great week. Let's see how these other companies report this week. Big week for earnings. So it's definitely going to move some names, and we'll kind of recap that next weekend. I hope you have a great week. I'll talk to you soon. Thanks, everybody.